Okay, with regard to markets and how they fared this Thursday in terms of the move, we were down around 0.75% thereabouts. We slipped just below the 24K mark at close. We did slip, in fact, to the 23,750 odd mark, and thereafter we rebounded. So we did fairly well for ourselves. In the week gone by, we've gained around 1% or so in trade, and that's how it's played out. In terms of the Nifty Bank, there was weakness there as well, 1% lower on the Nifty Bank. The PSU banking index seeing much more of a cut than the Nifty Bank. Even for the week gone by, we've seen a sharper cut on the Nifty Bank. There you go, nearly 4% lower on the Nifty PSU Bank this week. So we've seen a fair bit of pressure with regard to those sectors. Let me talk about some sectors which have actually done well on a difficult day of trade. IT and pharma are those two which really stand out. A third of a percent higher on the IT index. We've also done decently okay on the pharma index. 2% lower on metals in trade on Thursday. 1.7% lower on the Nifty PSU Bank. The Nifty Realty Index down 1.5% as well. The Nifty FMCG down 1.4%. So you saw pressure on all of those pockets. The Fin Nifty, the Bank Nifty, both down nearly 1% in trade at close. So broadly, that's the broad brush take. But broader markets, Naeem.
Yes, broader markets, mixed show of strength coming in from the broader end of the market. In fact, it was the small cap index that has done really well, while the mid cap index over the course of the week has ended with a cut. That's the intraday chart. Of course, let's have the longer term chart for the week gone by. And if you take a look at that on the small cap front, yes, almost a 2% uptick coming in, and the small cap 250 index was shining bright. There were days where we've seen the Nifty in the red, but the small cap has outperformed by being either flat or in the green. The Nifty mid cap also not all that bad, 0.6% higher in a week that has been largely volatile, and we've seen mixed trading days coming in. The broader end of the market at least has shown some sign of resilience. But let's take that conversation ahead. We've spoken about what the week was, but more importantly, what can you expect from the week that's lying ahead? We have Mr. Ajit Nayak, the Senior Technical and Derivative Research Analyst at HDFC Securities, joining us on the show. Ajit, hi, thanks so much for your time. Good to be speaking with you. First off, give us your sense on how you are reading the charts for the Nifty. It's been quite subdued a week for the benchmarks, and more importantly, the kind of strength or weakness that you're foreseeing for the Nifty Bank, given that it has been absolutely under pressure in the week gone by.
Yeah, first let us speak about the Nifty. So if we look at the Nifty from a technical perspective, on 24th March, it has made a similar kind of a low of 24,790 odd level. And today there was an interesting pattern. We did break that low, but we did not sustain below that low. So we called such behavior as a sweep of liquidity. So whenever there is a sweep of liquidity, there is a high chances that market tends to move in a northward territory and can test 24,300 level. So whenever we look at the chart, we also take a support of OI distribution chart. So to look exactly what the big traders are exactly looking for, which level, and how the trades and the dealers are placed with their delta and gamma on the basis of the open interest data. So what does the today's open interest data suggest? So if we look at the open interest data at 24,000 level, there is a lot of put addition. So I think after a couple of session, if we see couple of session, there was lack of fear in the market, but suddenly in a day or two, we can see that fear coming back in the market. So that is not really a good sign. Because if we look at the India VIX, it was taking a support of 17.25 level from where exactly the breakout happened, and we saw a rally till 29 level after giving that breakout, and we are revisiting that neckline of 17.25. So it is very important to watch this level. So if we break that 17.29 level on a VIX and we see a rally in Nifty, so that will be a good sign for the trader and for a Nifty player as well, that we are consolidating, we are taking a price-wise, time-wise correction, not a price-wise correction. If it didn't, and we are this VIX is moving above 20 level, and similar kind of OI data keeps on building up at the call side, then there is little risk for the market. So for me, as of now, 23,800 is a very important level, because there is a good pattern, which intraday pattern, which has happened today, breaking the low and bouncing back about that low. That's a good trap sign, a bad trap sign. And if it sustain about that level, we can see Nifty heading towards 24,400 to 500 mark.
Your picks, therefore, in a market like this?
Yeah. Please come again.
Your top picks in a market like this?
So because market is not very bullish friendly, so I am coming up with two picks. One, I am looking for a short side, and one I am looking for a long side. So I'll come up with first pick as a hindalco. Hindalco, if you look at the chart, there is some bearishness developing on a hindalco chart. Also, if you look at a weekly, there is a clear-cut negative divergence which is happened on the hindalco chart. And if you also look at the metal index today, metal index shows like it was showing some pain, and similarly, even the Hindalco is showing the same kind of pain, a relative performer in a downside. So I'm considering Hindalco to sell with a stop loss of 1080. I'm looking for the target of 980. The only request for the trader would be, as soon as you are in a favor, it is very important to trail the stop loss, because the overall trend of the market seems to be quite positive. So we need to lock in the profit quickly whenever we are taking a contrarian bet, because the long term charts of the metals are still positive. The second pick from my side is Adani Ports. So Adani Ports chart is very fantastic. If you look at the chart from a weekly perspective or also from a daily perspective, we can see a deep cup pattern, and it is sustaining about that 1600 odd mark today. Even in a falling market, it just tests that the neckline of 1600, and closing above that level gives us a confidence that there is more steam left on the higher side. So I would recommend to go long on Adani Ports with a stop loss of 1586 for the upside target of 1770.
Hindalco on the short side and Adani Ports on the upside, looking good to Ajit right now. Ajit, let's talk about some sectors that have been in focus so far. And let's start by talking about PSU banks, the top losing sector in the week gone by. So much pressure there. Yes, we've seen that ECL provisioning norms coming into play. And while all of that is on the fundamentals, are you seeing any buying opportunities in some of the PSU names given the kind of dip that we've already seen very recently?
PSU, if you look at PSU index, if you look at on a monthly or a weekly time frame, yes, they are still positive. But the rally was so much, the angle of the rally is so steep that I think we should look for some more consolidation. If it consolidate for say next 4 to 5 weeks, then I would be looking for the PSU's stocks to go for a long side, because if you look at the chart on a monthly time frame, there is a negative pattern on the candlestick which has developed. So I would wait for the PSU to come around 7500 mark, then consolidate and give some bullish indication with a good candlestick pattern, and then we would think of entering on a long side. Otherwise, till it does not cross 9070 mark, it is a sell on a rally kind of a sector.
Okay. Thank you so much for joining us this afternoon. We'll let you go on that note.